After 4 years of exile from market borrowing, Greece is back with a vengeance, but as a real economy, discouraging investor sentiment. Theodore Krintas and Dimitra Vassilakopoulou shed light on the financial situation in their country. Dimitra, do you think Greece was even ready to enter into the bond market?
Oh, yes, I believe so, definitely, yes. You see, Greece had to convince the financial community that it had managed to overcome one of the deepest and hardest crises in history, losing almost 25% of its GDP. So great achievements as primary surplus and current account surplus had to be sealed by the market's recognition. Also, the timing proved to be very, very right, as the issuance oversubscription was impressive and the yield came out at very decent spread levels. We have to understand that this issuance put Greece again, after 4 years of absence, in the market's map.
Very interesting. Greece's really high returns in a period of ultra-low interest rates must have shored up investor confidence, or did it?
Well, absolutely. We are in a period where all investors all over the world are hunting for yields. Now, offering a higher yield, an extra yield, being a country in Europe, after all these efforts that Greece remains in European Union, it is very important. But it is also another part that is important to state here, the fact that investors are seeing the efforts that Greece itself undertaking. And I understand that this is going to be elaborating more and more in the months to come.
Now, some of the systemic issues still riddling Greece are, of course, very high debt levels. We're looking at numbers of over 300 billion euros. Tell me, what does that do in terms of negating the impetus or momentum that you've been able to build in the bond markets?
The problem of high debt level remains, and we have to face it. But it does not consist a threat at the moment. So we have to realize that 85% of our debt is in the hands of our European partners, the ECB and the IMF. So the average rate of our debt is very low. It's lower than 2.5%, and the duration profile is very favorable. So what we have to do is not to lose all of our energy on that. We should focus on reforms and on exploiting our comparative advantages, which could be agriculture, tourism and shipping, in order to restart our economy and to pay off all of our debt.
Right. Now, she's just talking about some of the investor confidence. The Greek government has, in some ways, denied the scale of this crisis. Tell me, how does that hit at investor confidence, both internationally and locally?
In a huge way, I'm afraid. It has been a very long time where Greek politicians were presenting the situation on a different way than it was. So finally, the investors lost the confidence on the country, and that hit the country even more during a very difficult period. I have to say that this has already changed. Actually, it is my belief that Greece has changed already, and the fact that we are seeing some remaining in the same path is because it has been there for the past 30 years or so. I understand that our European partners, along with IMF, are helping the country to understand what should be the next steps. The population has also believed and decided that it will take on the next sure steps. And for sure, Greek statistics are not on the table anymore.
Now, in order to continue with the growth that you'd like to see happen, what sort of regulatory changes do you want to see the government enact as soon as possible?
There are a couple of very important steps that the government has to take. The sooner, the better. It is very important, for example, to create a stable tax and economic environment for the country for the next 5 to 10 years. Stability is very important in order to attract foreign direct investments. And Greece is in big need of foreign direct investments for a simple reason. The money that exists in Greece are not enough in order to restart the economy quickly. So first step, focus on tax and economic stability. Second step, focus on helping enterprises to start up and grow, Greek and international enterprises. I think if those two things happen sooner, the economy will grow very, very quickly.
Now, in order to achieve some of the changes that Theodore just mentioned, of course, you still want to have as much of a stable environment as possible. But as we all know, there has been tension, there have been protests in the nation's capital, bombings even. Tell me, how have those impacted the market?
Greece has paid the price for all this behavior and for all its weaknesses, and especially its political instability. Things have changed dramatically, have improved dramatically during the last 2 years. Greeks have finally realized that without great sacrifices and hard work, their future looks gloomy. So extremists were pushed out to the fringes of the society, and we have managed this year Athens tourism to become one of the best seasons this summer since the Olympic Games of 2004. Even the opposition has become much more realistic, as everybody now realizes that the strict European framework leaves no other alternative but to proceed with the necessary restructuring of our economy.
Okay, very positive to hear. Now, I want to hear from you, Theodore. Do you think that Greece's entry into the bond market is a signal that the European community has officially entered out of the debt crisis?
It is a very positive signal, and that is for sure. But we still know and we still understand that in Europe we have a lot of steps to take in order to get into a new growing era. So we are not in a crisis mode still, this is our belief, but there are still more steps to take. And I understand that the first step by Greece entering the euro markets, the bond market, was positive, but we need more and more to come. I hope that leadership and visioning of a European Union that will grow for the prosperity of their people and the world in all will come and will be the base of our future.
Very exciting indeed. Good luck ahead to Greece. Theodore, Dimitra, thank you so much for joining me today.
Thank you.
Thank you for having us.